Sean, could you talk a bit about intrinsic value of a property?
One of the debates we have right now when we're reviewing properties on behalf of buyers is that we are essentially competing with private non-traded REITs. We're competing with global investors who are seeking out safe, secure investments here in America. And the question becomes, how do you establish value, both current value as a competitive asset, and how do you establish value long term? If you are a high net worth investor who's looking for yield, you have a series of decisions to make, and one of them is how you finance one of these properties effectively. Currently, you can get the best rates on financing them with 50 to 60% loan to value. With these compressed cap rates, we're really advising clients that they should really have relatively little leverage to protect themselves for the next 10 years, which would give them a good return, an acceptable return based as an alternative investment. If you're in a longer hold, some of our folks want to amortize these things and actually set up self-amortizing debt, so they'll have a free and clear asset in the future to mitigate what will be the refinancing risk. We essentially try to suggest to people that we see two principal risks in the real estate business. One is the refinancing risk, depending on how you've approached the property and how long you're planning to hold it. And the other is the reletting risk. If you're a passive investor, you really don't want to know about reletting and releasing. That's a risk that you don't want to engage with. So that our strong advice is that you should be looking for credit tenant properties that have 15 to 20 years. And there are only a handful of corporate real estate departments that will sign a long-term lease. Many of them will sign 10-year leases at a minimum with a series of renewal options. And of course, these options are really critical in terms of having appropriate increases that will eventually mitigate any inflation that we keep saying is on the horizon but hasn't quite kicked in yet. But if you're making a long-term investment, it's a consideration that you really want to factor into your thinking. So, on the subject of valuations, we have to look at what the current market is and try to secure the very best properties that are available for a tenant and for a client, and also look at what the result's going to be in the go-dark value or the replacement cost as well. We've got pretty good data on that. We've invested both the human capital and the data sources to be able to review this on behalf of clients. And so please give us a call. We would like to be able to be of assistance to you in making these decisions in what is a really tough real estate market.